Well, hello and welcome to this Moneycontrol live stream. It's a Tuesday morning and you're watching Morning Trade with me, Nandita Khenka. Well, over the next 30 minutes, we'll be talking about the cues for trade, all the stocks that have been focused in today's session, and of course, the Realty pact. It has seen a strong rally over the last two sessions. Is it time to buy into some of these counters? We'll get you more on that later on the show. But if you have any stock-related queries, send them in to us on our live feed and we'll have them addressed by our technical experts on the show. But before we do all that, let's take a look at the top headlines at this hour. Well, Wall Street closes a volatile session in the mixed zone. Dow and S&P 500 eke out minor gains, but the Nasdaq ends flat as investors await a raft of inflation data in the US this week. Asian markets trade largely higher. The Kospi rises after Korean central bank holds interest rates at 3.5%. The SGX Nifty too is signaling a higher start for the Indian markets. We'll have to see whether the Nifty manages to clock in that 17,700 mark in today's session. And on the show today, Realty Index surges 7% in the last two sessions. Time to move into some of these stocks like DLF and Godrej Properties. We get you an expert view on that. And also, stocks in focus today are SBI, Kotak Mahindra Bank and IRB Infra. Well, let's first get on board our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities, joining us this morning. Good morning, Sacchitanand. Good to have you on the show. But the Nifty has, been gaining for the last six sessions. Yesterday, we missed out on that 17,700 mark by a whisker, and we managed to, end largely flat. But today, again, SGX Nifty is hinting at a dash at that 17,700 mark. Do you expect that level to be conquered in today's session?
Good morning, Nandita. Thank you for having me on your show. As you saw, yesterday we saw Nifty starting on a very tepid note. We saw Nifty, scaling towards that resistance zone of the falling channel, which is placed somewhere close to around 17,670. We saw a very lazy, lethargic move, and some profit booking was evident after a rally of around 700 points. If you look at the formation, it's a classic doji formation, with a resistance clearly defined at 17,700. The option data is also suggesting that this particular barrier will be a difficult one to negotiate. And that's why we believe that probably after a good, strong rally of 7 days, where we have not seen any meaningful correction, the market may, show signs of consolidation. So if you look at the placement of its trend stand indicators, we still have evidence that the RSI is still, oscillating in a very strong way. It is placed somewhere close to 61, so it has still not hit that overbought kind of a zone. But when it comes to ADX, it is again flattening out at 32. So probably, that this 17,700 hurdle may, be held even for today's trading session. And probably, if we see a good, strong opening on the positive side, that particular opening may, again be sold out. So we are expecting that this particular rally that we have seen for the last 7 days probably could be stalled. We may see Nifty, showing some signs of consolidation to a marginal correction. So we are expecting a pullback towards 17,520 kind of a zone, where its 200-day exponential moving average is placed. So the stance for at least today's session is to sell on the rise. We are expecting the 17,700, 17,720 level to be utilized as a shorting zone. The stop loss should be placed at 17,760 for a positional target of around 17,520.
Right, so those are the levels to watch out for. On the Nifty, expect some consolidation. Sacchitanand, hold that thought. We'll come back to you, but let me also get on board Pankaj Kumar of Kotak Securities to decode the rally that we've seen in the Realty Index. It has been a rock-solid rally over the last two sessions. The index has gained somewhere around 7%, and that was largely led by the surprise pause by the RBI. Good morning, Pankaj. Good to have you on the show. We already saw some of these realty companies reporting very strong pre-sales data, but that wasn't really reflecting in the stock prices. So would you say that the exuberance that we are witnessing in the realty stocks, this is now largely led by a sentimental impact due to the RBI pause? And if so, do you think this rally has more legs to it now?
Good morning, Nandita. So as you rightly pointed out, that the interest rate pause is a positive for the real estate sector, of course, and we have seen the stocks moving up. But if you look at the fundamentals also, the sector, if you look at the listed companies, they continue to gain the market share. And overall demand in the sector has also been quite positive. We have seen in the December quarter itself the 15% growth in the volume numbers for the industry as such. And the listed players have continued to gain the market share. The market share is higher than what it was in the pre-COVID levels. And if you look at the valuations of these companies, the real estate stocks, that is at a multi-year low. And the latest move by RBI gives a positive direction for the overall demand, and particularly in the mid-income space. And if you look at overall some pockets, particularly like some of the players like Lodha or the DLF, they have reported very strong numbers in the recent time. Lodha, if we look at overall, they are on track to meet their guidance. They have already reported the numbers into some pre-sales. And Q4 also looks to be strong given the strong demand, and inventory in the system is low. So that also gives a positive side on the demand side.
Right, you spoke about the inventory level being low. Of course, that is the case. But do you expect property prices to head higher in that sense now?
So we have seen like in the December quarter itself, the prices have on a YY basis has gone up by 8-9%. And the prices have increased because the cost pass on that we have seen in the past and is still continuing. And the inventory in the system at around 1.5 years of the sales. So this gives an indication that the prices would tend to be higher in the near term. Of course, but the positive outlook on the sales is largely driven by the demand that we have seen from the end user and the affordability that we have seen in the real estate sector.
You know, much of the strength is being witnessed in the luxury end of the market. We're talking about the likes of DLF, Oberoi Realty, Lodha and the likes. But are you seeing some sort of green shoots in the affordable housing segment as well? Because this is the segment that was largely impacted by, the rate hikes, given the fact that we've seen a 250 basis point rate hike over the last 1 year.
Rate hike is a dampener, of course, in the last 1 year that we have seen. And a pause on the rate hike and over a longer period, the interest rate cycle moves downward, then of course that would be a positive for the overall affordable housing segment as such. But overall demand side, we see there is a more interest from the buyers from the more of consumption perspective, and that is going to drive the demand.
Right. When you talk about the Realty Index, it has gained 7% in 2 sessions. But, over the last 1 year or so, it is down somewhere around 12%. And even on a YTD basis, it is still down somewhere around 3% or thereabouts. But do you think that the valuations have now turned attractive for some of these realty players? And it is actually time to, move into some of these stocks like DLF and, the likes. And, of course, even the smaller ones, say Sobha or Ajmera Realty and the likes.
So the stocks that we track where we see the valuations looks attractive apart from Godrej, where we have a sell rating. And when we refer to the valuation, it is around 4 times on EV EBITDA on a FY24 sales, pre-sales, that number we look at. So the valuation looks quite attractive. And in terms of stocks, where we see maximum upside is the Lodha, where we have a target price of 1,300 rupees. DLF has seen a movement, of course, but we have a long-term, we are positive on the stock on the long-term basis. We have a target price of 430 rupees.
Well, so those are the stocks to watch out for from the realty space. But a final question to you, we've seen some good times rolling in for the realty stocks over the last couple of trading sessions. But do you think another rate hike, which the RBI governor has indicated could happen in the future? But if that happens, do you think that will be like a big dampener to this kind of rally now?
See, as I stated, that the valuation looks attractive and the upside potential is quite high. And on a long-term basis, we are positive on the real estate stocks that we track. And even the demand that we see, it looks sustainable and in the medium to long term. And overall, if you look at the penetration in the sector, India, it is quite low. And India is going to see strong economic growth over a long period, and there's a demand for housing, and it contributes significantly to the GDP. So the growth in the real estate sector is expected to continue over a long term, and that will drive the long-term demand and the performance of these stocks.
Well, Realty poised for good times and is on firm footing when it comes to the long-term perspective. Well, with that, thanks a lot, Pankaj, for taking out time and joining us this morning and sharing your thoughts with us. Let's go back to Sacchitanand then. Sacchitanand, let's talk about SBI. That is the stock of the day for me, aside of Kotak Mahindra Bank as well. We'll be speaking about that as well. But SBI will be looking to consider fundraising up to $2 billion on the 18th of April. If you see the stock, it hasn't done much over the last 5 days, up around 0.5%, not even 0.5%. Now, what would you expect this stock to do in today's session, given the fact that, there is RBI policy is also out of the way, even though banks haven't really done all that well since the RBI policy. Would you expect some bit of an upside coming in on the news flow that is surrounding the stock now?
Well, Nandita, I think the consolidation that we have been seeing for the last 4 trading sessions is healthy. If you look at the placement of its short-term averages, the 5 and 20 is showing a convergence. So this is a good sign of momentum. If you look at the RSI, it is slightly one shade lower below that 50 mark, which also indicates, a fresh momentum in play. So once we have a concrete breakout above 530 levels on a closing basis, then probably we may see this particular move getting extended comfortably towards 545, 550 kind of a zone. So as of now, I think the strategy should be to continue holding one's longs. The floor is well placed at around 500, 510. Once we have this particular breakout in place around 530, then probably we can trail our stop losses higher towards 521 and add some further longs for a probable momentum target of around 545. So I think it's a good stock. The consolidation is healthy. Probably the breakout would be much more sustainable in case if we see it today, and the rally may continue towards 545.
Right, so that's the call on SBI. But let's also talk about Kotak Mahindra Bank. That would be the next stock of the day for me, because the March data signals that FI holding has gone down in the counter by somewhere around 1.5%. Compared to on a sequential basis. So in that sense, the Nuvama has said that the stock could now see a weightage, a higher weightage on the MSCI index, and that would come as a big boost for the stock price if you really say so. Because so how would you view this counter on the charts now, given the fact that there is this news comes as a big positive for the stock?
Well, Nandita, for the last 22 weeks, the stock has been trending below its 20 weekly exponential moving average. So considering this fact, the medium-term trend has always been more on the negative side. Even right now, the kind of rally that we have seen so far from the base of around 1660, that particular base was held on well. But the rally or the momentum was not that strong. It has been a very gradual rally on the higher side. So the immediate level to be negotiated is placed somewhere close to 1800. If we see this particular level getting breached, then probably it could be a very strong short covering trigger that could unlock the move towards 1880. But as of now, I think considering the data, the news is already out. Probably we should be watchful. Once we see this particular stock, scaling towards 1800, this stock needs a very confident breakout above this particular level. So unless we don't see that, it's better to avoid any fresh long positions at this juncture. We may see this particular range again getting, oscillation within this particular range itself. I think 1760s, 1800 has been a resistance zone. And on the lower side, 1700 so far has been a very strong support. So probably a very confident breakout above 1800, which could lead to a further short covering rally. And the probable target could be somewhere close to around 1880.
Right, that's the view on Kotak Mahindra Bank. Since we are getting quite a few queries on some of these banks, I would like to take up a few of them with you. The first one is on Bank of Baroda. Gaurav Sharma wants to know your thoughts. And we also have a query on IDFC First Bank coming in from Prabhu, and he wants to know your long-term view on this stock. What would you advise them to do on these two counters?
Well, Bank of Baroda, even right now, the trend is quite sideways. If you look at the last 8 weeks, we have seen a strong hurdle somewhere close to around 170, 175, and the support is well placed at around 160. So probably we may see this particular action within this particular range getting continued. But when it comes to IDFC First Limited, both I think the main one and the bank, we are not expecting any major upside as of now. So the immediate hurdle at around 60 is well placed, well positioned. So we don't see any further up move at least for the next 6 months. On the lower side, the expectation is that this particular drag, which we have been seeing for the last 3 months, this particular drag may continue on the lower side. We are expecting a move towards 44, 46 kind of a zone. I think that will be a good zone wherein some long-term commitments can be initiated. We've already seen a very strong rally in this particular counter from the levels of around 30 right up to 60, and I think it's into that phase of time-wise consolidation. The first leg of this particular pattern is already unfolded. Probably we may see some further price correction towards 44, 46 kind of a zone. So I think once that particular correction is done, then it will be in a sweeter spot, to consider it into one's long-term portfolio. But as of now, I think we've already seen a substantial rally. There's a time and price correction in place, and we are expecting a move towards 46.
Right. From banks, let's move on to the cement basket. We have a bullish report coming in from Macquarie on the entire cement basket. It believes that robust demand and input cost moderation is something that is driving the constructive outlook when it comes to the cement space. Macquarie hasn't really factored in the cement price increase for FY24, and it believes that upside risks remain when it comes to the sector. In fact, it has come out with ratings on 3 of the stocks. Ultratech Cement, it has an outperform rating with a target price of 8,498, and this stock is Macquarie's top pick. Aside of that, it has bullish calls on Dalmia Bharat, and it remains neutral on Ramco Cement. How would you view some of these counters now?
We are optimistic on this particular pack. It's a disclosure disclaimer from our side that we have recommended Ultratech Cement and Dalmia Bharat in our clients' portfolio. When it comes to Ultratech, even we are considering the fact that this particular move could continue towards 9100 eventually. So we are, still recommending longs in this particular stock. We have already seen a very strong rally in the last 3 months. So probably some consolidation to corrective action may be due here, but the overall trend structure for Ultratech still remains robust. So we are expecting this particular outperformance to continue with a price target somewhere close to 9100. When it comes to Dalmia Bharat, it has been one of the recent outperformance from the pack. And we are expecting that this particular rally that was triggered a few weeks back, somewhere close to 1700, we are seeing an evidence of a very stronger base. So stop losses can be trailed higher unless we don't see a closing below 1660 kind of a zone on a weekly basis. The structure should be healthy enough to take this particular stock higher towards 2600. So I think one can still consider these two pockets. Declines, whenever you see in this particular counter, should be utilized to add on to positions. When it comes to Dalmia Bharat, the level of around 1680 will be more important. In case if we see a closing below this particular level, then the entire structure changes. Else, every decline should be healthy. And we would recommend holding this particular counter in your portfolio for a price target of around 2600.
Right, so that's the call on the entire cement basket. Let's also take up a query on United Spirits. Deepshika has written in, and she wants to know your thoughts on this counter. On a YTD basis, it's down somewhere around 14%, and it's pretty close to its 52-week lows now. So how should one play this counter now? Look to buy into it, or if they hold it, should they average it out, or should they wait it out?
Well, I think it is maintaining its tail above the 200 weekly exponential moving average, which is placed somewhere close to around 740, 760 kind of a zone. So I think this particular zone is a good value zone wherein the stock can be considered in one's portfolio. If you look at the major trend, we already saw a very strong impulsive move, which was initiated in the month of April 2021. From that particular low, the base at around 500, we saw a very strong impulsive move towards 950, 980 zone. After that, the stock is showing major signs of consolidation, with the fact that, it has always respected this particular area of around 740, 760. And we have always seen a rebound from this particular zone. So I think this is a healthy zone to consider when it comes to portfolio additions. We can keep a stop loss somewhere close to around 680 on a weekly closing basis, and recommend some long positions here. The immediate effect could be evident once we see a very strong move, above the 785 mark, which has been a slightly hurdle for the last two expiries. So once we have a decisive move towards that, probably we may see fresh signs of impulse getting in action. So I think this is a good level to consider, 750, 760, 740. I think this is a good level wherein some longs can be committed. The stop loss should be placed at around 680 on a weekly closing basis.
Right. Let's move on to the next query then. This is coming in from Srikanth, and he wants to know your thoughts on IOC. Now, crude prices are once again edging higher after the surprise production cut announced by OPEC. Do you expect some kind of a downside to set in now after the good run that we saw on some of these OMCs in the last 1 or 2 months?
Well, I think the trend is still positive. I would say, in the last 8 weeks, we have already seen a good amount of correction in this particular pocket. But if you look at the immediate level, I think this level is suitable for considering fresh longs. From a momentum play, a breakout above 80 would be much more important. So in case if that particular level is breached on the higher side, probably we may see another impulsive leg getting unfolded. But as of now, I think the trend is healthy. We've already seen a fresh, sustainable impulsive move, which was unlocked a couple of months back. After this, we have already seen a good consolidation to corrective action. This can be a good time wherein some longs can be committed. The major stop loss for this particular trend is somewhere close to around 70. So unless we see this particular leg getting, not getting violated, the trend still remains on the positive side. So I think one can consider building long positions with a stop loss at around 70 for a probable positional target for 6 months, which is placed somewhere close to 85, 86.
Right, I want to get in the last query for the day, and this one is coming in from Funny PG. And he wants to know your thoughts on National Aluminium, Nalco, that is, and NHPC. Would you advise him to hold on to these counters now?
Well, I think NHPC one can, because the major trend is still strong. We've already seen a very strong breakout, somewhere close to around 34, 36 levels. The pattern target for that particular breakout is placed somewhere close to 56. On a major scale, we are still seeing signs of consolidation. So I think even if the stock falls down towards, say, 40, 32, 36 kind of a zone, I think that will be a healthy zone wherein one can consider fresh long positions. The stop loss should be placed at around 32. And the pattern target is placed somewhere close to around 56, which can be achieved in a year or so. So I think NHPC can be considered, but Nalco, I think it is still in that major sideways to negative trend. So it can be avoided, but NHPC can be considered.
Well, hope that answers your query. And with that, I think we are completely out of time when it comes to our query segment. But before I let you go, Sacchitanand, leave us with some of your stock recommendations for viewers this morning.
Well, Nandita, I think there's a good momentum which has been evident in all the IT stocks ahead of the results, and TCS is one particular stock idea that we have recommended to our clients. If you look at the entire structure for the last 5 trading sessions, we have already seen a good rebound from the major support zone. The 3300 mark, once we see that particular level getting breached, further short covering is expected. If you look at the placement of its 5 and 20 day exponential moving averages, they are showing signs of fresh momentum play. We already saw a strong OI addition of 5% in yesterday's session. So we expect this particular momentum to continue towards 3360. So we are still recommending building long positions here. The stop loss should be placed at around 3220 and an intra-day target somewhere close to 3330 and a positional target of 3360 is evident. On the short side, we have Jubilant Foods, which has broken down from a a classic contracting triangle formation. We have already seen evidence of a move towards 400. So a positional target is placed somewhere close to 400. Any opportunity on the higher side should be used to create fresh short positions. The stop loss should be placed at around 430.
Well, those are the stock recommendations coming in from Sacchitanand this morning. Well, with that, Sacchitanand, thanks a lot for taking out time and joining us this morning and addressing all of your queries. Well, with that, we are completely timed out on this edition of Morning Trade. And it's a goodbye from me, but don't go anywhere because coming up next is Opening Bell.